Good morning, everyone. Welcome back to the channel. Today is Wednesday, December 3rd, and we are breaking down a very red, very volatile trading session from yesterday, Tuesday, December 2nd, 2025. If you looked at your portfolio yesterday, you probably saw a sea of red. The S&P 500 is stumbling, the Dow is shedding hundreds of points, and the crypto market? Well, Bitcoin is taking a serious breather. In today's video, we're going to cover the numbers, why the S&P 500 lost the critical 6,800 level. The macro, the manufacturing data that has Wall Street worried about a recession. The politics, President Trump's major hint about replacing Jerome Powell, and who might be next. Crypto, why Bitcoin crashed $6,000 in 24 hours. Smash that like button if you appreciate the daily updates. And let's dive right in. Let's start with the scoreboard for Tuesday, December 2nd. It was a classic risk-off day. Investors are taking chips off the table as we head into the final month of 2025. The S&P 500 closed down roughly 0.53%, sitting just around 6,804. We saw it dip below that psychological 6,800 line intraday, which is a bearish technical signal. The Dow Jones was the biggest loser percentage-wise, dropping nearly 1%. That's over 400 points gone, closing at 47248. The Nasdaq 100 fared slightly better, but still finished in the red, down 0.36% to 25289. And look at the Russell 2000. Small caps got hammered, down 1.25% to 2469. Why? Because small companies are the most vulnerable to the rising tariffs we're about to talk about. The VIX, which measures market fear, popped up over 4% to sit above 17. When the VIX starts creeping toward 20, you know traders are getting nervous. Now, what is driving the sell-off? It's a hangover from Monday's data that markets are finally digesting. Yesterday, we got the ISM Manufacturing PMI for November 2025. The number came in at 48.2. Remember, anything below 50 means contraction. This is the 9th consecutive month that U.S. factories have been shrinking. The report showed that new orders are drying up and employment in the manufacturing sector is falling. Wall Street is looking at this and saying, okay, the AI boom is great for tech, but the real economy, the guys making cars, steel, and appliances, is hurting. This data is putting massive pressure on the Federal Reserve. Speaking of the Fed, we are officially in the Fed blackout period. That means no Fed officials can speak publicly until after their meeting next week on December 9th and 10th. But that didn't stop the rumors. The market is pricing in an 85% chance of a 25 basis point rate cut next week. If the Fed doesn't cut, expect a bloodbath. But the bigger story, and this is massive, is coming from the White House. President Trump made comments late Monday confirming that he has officially selected a replacement for Fed Chair Jerome Powell. Powell's term is ending, and the market hates uncertainty. While Trump didn't drop the name live on TV, all the insiders are pointing to Kevin Hassett, a former White House economic advisor. Why does this matter? If Hassett takes the chair, the market expects a much more dovish Fed, one that might cut rates aggressively to support Trump's tariff policies. While lower rates are usually good for stocks, the fear is that this could reignite inflation and compromise the Fed's independence. That uncertainty is why you saw the Dow sell off so hard yesterday. And we can't ignore the tariff elephant in the room. The administration is doubling down on the 25% tariffs on Mexico and Canada and the 10% hike on China, set to kick in this January. Auto stocks were among the worst performers yesterday. Why? Because supply chains are global. If Ford or GM has to pay 25% more for parts coming across the border, their margins get crushed. That reality is setting in now. We are moving from campaign promises to policy implementation, and the market is repricing the risk. Now, for my crypto holders. I know yesterday was painful. Bitcoin took a nosedive, falling over 6% to trade around $85,467. We were flirting with $95,000 not long ago, and now we are fighting to hold $85,000. What happened? Risk-off spillover. When the S&P and Dow drop, crypto usually drops harder. It's the highest beta asset class. Profit-taking. We had an incredible run in November. A correction was overdue. Dollar strength. With the tariff news, the US dollar index has been strengthening. A strong dollar is historically bad for Bitcoin price action. The fear and greed index for crypto has flashed back into extreme fear at a level of 20. This is a massive sentiment shift from just a week ago. Altcoins took it even worse. Ethereum, Solana, and the majors were down 8 to 10% across the board. If you are a long-term believer, this might be a by the dip moment, but be careful, falling knives are sharp. So what do we watch for today and tomorrow? Keep your eyes on the ADP non-farm employment change coming out later this morning. If that number is weak, it confirms the recession fears from the manufacturing data and could push stocks lower. But if it's too strong, it might make the Fed hesitate on that rate cut. We are in a bad news is bad, and good news is confusing type of market right now. My take, volatility is back. With the Fed meeting just a week away and political headlines dropping daily, keep your position sizes manageable. Don't chase the red candles. I'll be watching the 6,800 level on the S&P 500. If we close significantly below that today, we could see a flush down to 6,700 very quickly. That's your update for yesterday's session, December 2nd.
Let me know in the comments. Do you think Bitcoin holds $80,000? And who do you want to see as the next Fed chair? Subscribe if you haven't already, turn on those notifications, and I will see you in the next one. Happy trading!